no matter which way we look at this thing, we come up with the same conclusion. We're in the acceleration phase, and the final dramatic part is about to happen. The bull market in gold and silver began from a bear low in December 2015. Okay. Gold then was 1,050. Okay. And most of the gold bull markets, if you go back in 50 years and look at them, they last, either side of a decade. So it's not like, 2, 3 years, there's your bull market. Yeah, there you go. And anyway, you can see that the one in 2000 ran up to 2011. There's 11 years there. Okay. And you don't go quite far enough on that 1980 peak, but you can go back to the mid 70s and see gold was in the 30s. Okay. Now, here we have a situation where we started from 1,050, December 2015. Now, when we first came off that low, yeah, right there, 2 months after that low, MSA put out a report saying, we're no longer bearish. We got bearish in January of 2012, by the way, way up 3 months after the high. Anyway, annual momentum of gold, not the price chart. Price chart was make it a low, it looked like hell. It's going down forever. Annual momentum of gold, where we measure each month's action in its relationship to above or below a 36-month average, had created a structure that if you looked at the momentum chart, you'd say, wow, what a base. Whereas when you look at gold, it was just descending. But on momentum, it was this for a couple of years, flat. When we broke out, we gushed. We had a buy signal 1140. We gushed up to 1360 in a matter of a few months. That was like the first, I'm back, okay? Gold saying, I'm back. Okay, that was that first rally off that low. Yep. Then he went sideways for a couple of years there between 1350 and back under 1200. And then you took off again and you ran up to the 2020 high when you get up to 2070, I think it was, in March of summer of 2000. In early 2020, you got up to 2070 again. And what'd you do? You topped out. You had to flush out back into October of 2022, where you went down that last little spike down there in October 2022 that went to $1,615 or so.
Michael Oliver said that despite breaking horizontal lows on the price chart, momentum indicated it was just a correction, not a top. He mentioned that we V-bottomed off that low, and the next thing you know, you're back over $2,000. Gold labored again around $2,000. But instead of falling apart, it moved horizontally. Finally, in March of 2024, gold's annual momentum developed a range of action that had prevailed from that 2020 high through early 2024. You don't see it on the price chart, which is irregular, but on momentum, there was a nice flat ceiling, and we blew through it in March of 2024. At the same time, he noted that lagging gold miners, which had gone down during those years, and silver, which had gone down from the 2021 high to 2023, had the same type of structure on annual momentum as gold did, meaning an easily definable square range. They both broke out at the same time as gold. He mentioned their buy signal on silver was $25.17, meaning if you close a month above that, you're gone. This didn't mean anything on a price chart of silver because you had plenty of highs up at $26, $27, and $28. But in March, you could see multiple highs just above $25. Most of those highs were actually around 26 ointment. Silver came up through $25, gushed up over $30, pulled back, and then shot up to $32.75, while gold was still going sideways from April, May, June, and July, either side of $2,400. Silver hit a peak just above $30, pulled back, and then in May, shot up to $32.75, even stronger than gold following that March annual momentum breakout. He observed a shift in these initial 3 months of that surge, March, April, May, and June. It shocked people, but something had changed in the market's tenor and tone. They were used to a trading market where you could apply all your simple trading tools to trade in and out. It was a range-bound, happy situation. But what happened in March said it's over. The range gibber freedom is over. The multi-year pause in the bull trend is over. We are resuming an aggressive bull trend. He went back and researched freedom that silver and gold had, especially silver. It's the leader in terms of percent gain. He looked at what happened to silver in the 1979 to 1980 blow-off phase, which was the last year of that bull market that had been going on since the mid-70s, and what happened to silver in late 2010, gushing up into early 2011 when silver reached $50. Silver actually hit a high in before gold did later on in September. That gushing move we saw in silver in the final months of those already aged was a massive acceleration of price and momentum, where all the old rules were thrown out the window.
Actually, what the acceleration phase in both cases lasted about 3/4. Now, what happened was, and we're already into that process as far as we're concerned. Pardon me if I'm getting long-winded here.
No, not at all.
It started when we broke out in late March. So let's say April, May, June, you had a surge, especially April, May. You had a big price surge in gold and the miners and in silver. And then you had, if you look at gold, it paused in April and May, and then June is a waste of time. And so far, July is still around 2,400. So there's been several months of sideways price action. Yeah, there you go. Now, if you can see silver there, you've been in this range. What is this, daily or weekly? This must be daily, I think.
Yes.
But since May, you'll notice that we've gone really sort of sideways. In other words, you made a high, but you really haven't collapsed. They tried to collapse it, but it then came back up again. It's like, you beat me in the head and I come back up. This is not behaving in any way, even on a price chart, like a top in gold or silver. Normally when gold makes a top or silver makes a top that's meaningful and you get a real pullback, you don't come back to that high again. Once you make it, you drop hard, and then maybe you have a reach back attempt, but you don't go back to the high again. In gold's case, made a new high. In silver's case, you went back to 32 again 2 weeks ago, top dollar tick. And they sold it again, 32. Let's sell 32 forever. Okay, right. Okay. This is exactly what happened in the mid-phase of the acceleration process. In 1979, after the first gush up that said, okay, I'm accelerating, you had a 3-month pause. What happened during that 3 months is the following. Price went into an up-down range. In the case of silver, it was a 15% range, top tick to bottom tick of the range. In 2010, December and January of 2010 and 11, silver also went into a range-bound situation.
And Michael, I have those charts up here as well. So
Okay.
here's 1970, we have 1980 and 2011.
Okay, what you've got, yeah, okay. See that clump of ink around either side of 17, 18 bucks there? This is daily, obviously. You'll see you rushed up big time from late August. You rushed up to October. And then September, early October, made a high, backed off, made a marginally higher. But from October, November, and December, you went sideways. Not a top. Again, they tried to beat it, but it wouldn't collapse. And when you oscillate that on monthly momentum, which we take each month's bar and measure it versus a 3-month average, what you had is you had a market that got extremely overbought in that initial wave of the acceleration phase, namely here from August through October. And it wanted to correct. Momentum wanted to correct. Price said, okay, I'm going to let you correct. What happened, you see there is price going sideways, but momentum had a sharp pullback and pull back to the 3-month average area, the rising 3-month average, a fairly intermediate metric. Okay, so you cooled off from vastly overbought readings to more or less what you'd call neutral, non-overbought momentum readings. In other words, the market was refreshing itself. And in so doing, it bored everybody for 3 months, and they thought, that's a top, that's a top, that's a top. It's when it came up out of that range early in December, you exploded. So actually from a November low through December and into January, you reached $50 on silver. You don't show it here, but actually there was a peak at 50.
Yeah.
You may have a close only here of the spot month, but the active contract reached $50. This is in 1980, we're talking now.
Right.
That was the end of it. Okay, but the acceleration phase was that initial push up, the 3-month pause, and then came the final 3 months of absolute no stopping it, just total off the page rocket ship. Okay, you say, well, that was an isolated event. No, it wasn't. Same thing happened in 2010, 2011, where after much period of uptrending, actually from a 2000 price low, 2000 year price low, gold made its low, silver made a low. You went up, had a pullback in 2008, but you kept going up till 2010, and then you entered an acceleration phase where you had like a 3-month gusher on the upside, and it peaked out, I think it was in September, October of 2010 for silver. Okay, now look at October, you'll see there's a gush up to October, and you got up to like $24.50 there.
Yep.
And actually there was 3 monthly bars. This looks like daily or weekly. This is daily. Okay, where price went sideways, and you had a 15% drop from a peak to a low, just like you did in 79. You had a 15% top to low, top trade to low trade. So a range bound situation that prevailed until you got actually into December. But silver made its peak in April of, no, hold on. Yeah, I'm wrong on that. Let's go back to look at that chart again. The congestion phase back in 2010 was November, December into January of 2010. Yeah, right there. This zone here, about $25 up to about 29. That was a 3-month congestion zone. And after that was over, you went to $50 in by April. Okay. You really take it off in February. So there was actually 3 monthly bars there that we showed a corrective process in silver while price went into a zone, 15% wide zone of up-down action. Momentum corrected from vastly overbought monthly momentum down to the 3-month average again. Okay. Or close to it. The 79 didn't quite get to it. 2010 did get to the 3-month average. And at that point, the next bar, the 4th monthly bar, meaning in this case, it would have been in January of 2011, yeah.
Yep.
You accelerated in April and reached $50 in 3 months.